Hi everyone, Michael McVety back for another quarterly analysis here in the Southwest Florida area, specifically like Fort Myers, Cape Coral, Port Charlotte, Naples, Bonita Springs, Punta Gorda, that sort of area. And so I just wanted to go over this with you again. Brand new year, first quarter, let's see what the results are. Again, the reason why we do this is the market getting better? So as a professional property manager of 30 years as a landlord, I'm kind of interested. So these numbers, what do they mean? Are they showing that things are getting better? Are they worse? What are we experiencing as a company? That sort of thing. That's what we're going to be doing today. So we're going to be going over our personal kind of or corporate information, I should say, and also what's happening around the nation. So let's see whether things are actually getting better and what does the data show us? So, just a little bit about myself and the company. Again, I'm the only master property manager here in Southwest Florida. I've been doing property management for 25 years, a landlord for 25 years as well here in Southwest Florida. I'm also serving on a national board for property management through the National Association of Residential Property Managers, also known as NARPM. And I've also been serving on the local NARPM board for the past 25 years. Now, big shout out to my staff. I really appreciate the work that they do. They're not here, but I'm going to praise them publicly. So Red Fortress was ranked number one by two separate third-party entities, if you want, or companies, one by business rate and the other one by propertymanagement.com. So very excited about that. They rated Southwest Florida companies and we came out number one. So we're very proud of that, just like we're also very proud to be the only nationally certified company in the area in Southwest Florida. Okay, so having said that, where are we going with this overview? So first thing we're going to do is we're going to talk about the U.S. real estate value, what's happening with real estate values in Florida, that sort of thing. Then we're going to get to the U.S. Multifamily rentals. Okay, so what's happening in the multifamily industry, the apartment industry? Because what happens there is normally a preview of what's going to happen in single family. So what we're going to do is look at the U.S. single family rentals, what's happening in that. Then we're going to get more specifically down into the Southwest Florida numbers. And then we're going to focus a little bit on our company data and what's happening there. Now, this episode, I kind of cut some slides out. We still have a lot of information to go, but I didn't want to get it too big because we're actually be doing a Zoom session for our clients in May where we're going to take some of these numbers and do a lot more with it. So stay tuned for that at the end. But we're going to kind of go a little bit quicker here this time. I'm going to cut some of the information off and save it for May so that this doesn't get too long. Okay, so how are we doing? First of all, the U.S. sales price. So how are things going with the sales price here in the United States? So you can see down here in Southwest Florida, you can see that we're kind of hovering at the 0 to minus level. Okay, so that's price change. Okay, that's what they're looking at for the forecast for us from this year to next year. So Zillow itself, who's doing this forecast, is saying kind of like, yeah, you guys are going to be either slightly negative or still zero next year. Now, what does the sales inventory look like? So with a different person, they're saying, and this is interesting, from February of 2025 to February 2026, so year over year, the number of listings in Florida went down 4%. Okay, so what does that mean? That means that as there's less listings, normally if you're in a down market like we've been for last year plus, that's a good thing. Okay, next thing, we're going to look at March. Now we're down to minus 8%. So what they're basically saying is year over year, in February to March, there's less active listings in the state of Florida. Okay, that's great. What does that do for us in home values? So if you look at home values here, instead of just looking overall with the United States, but breaking it down into Southwest Florida, look at that. The red indicates negative home values. The more red it is, the worse it is. The more blue it is, the better. And like we were talking about last time, you can see in the Northeast because they didn't do overbuilding. In fact, during COVID, they didn't build at all, and they were having their own real estate issues. Now, because we've overbuilt, you can still see in January of 2026, year over year, Punta Gorda leading the nation minus basically 12% in real estate value. So year over year, lost 12%. Cape Coral, just over 9% loss year over year in January. But here's an interesting thing. In March, look at what happens. Year over year, Punta Gorda minus 10%, Cape Coral minus 7.7. So listen, it's not fantastic, but at least the year over year from January to March, you're going from minus almost 12% in Punta Gorda down to close to 10%. So a reduction of about a point and a half. And then Cape Coral is down from 9.2 to 7.7. So again, down once again another point to a point and a half there. So at least we're starting to slow down with how our real estate is losing value in Southwest Florida. Now, how is the multifamily industry doing in the United States right now? It's still among the all-time lows. So again, multifamily nationally, it's normally at 93.5. Right now, it's at its lowest ever, basically, for the last 2 quarters, right down here, at just over 92%. Okay, so that's not great. U.S. Multifamily renewals, we're looking at it where they're saying once again that the rent growth is staying very similar. So outside of COVID, where the rent growth, like again, COVID was a weird time for many, many reasons. But when you're looking at the data, they're saying, hey, listen, we're below 3% for the renewals. So they're not even increasing leases by 3% nationally. And then if you look at the family U.S. Multifamily industry again, rent growth. Here's a different way of looking at it. What I thought was interesting about this is that this chart was they're talking about pre-COVID. Hey, what happened 7 years before COVID? What happens with the blended growth? What that means is new move-ins and also lease renewals. So that's blended together. Okay. What happens by month? So you can see where they're kind of like at 3%, like I was saying, by the month. Just depends, June and July could be very busy months nationally. Okay. And here you see 2026, we haven't even hit 1%. Okay. So what they're saying is right now is even seasonally comparing a year over year or month by month from before pre-COVID, we're not anywhere close to effective multifamily rent growth. Okay. And here's something also that's interesting. New move-ins, they're talking about how for the last 6 months, it's been negative. Okay, so it's not just this quarter, it's also last quarter. You can see almost like in the last like couple of years, nationally, there's been like negative growth or like a half a percentage point. So it's been basically very stagnant for 3 quarters of a year now. And then if you look at the U.S. multifamily renewal rate, you can see this is kind of interesting that in this quarter, you can see that it's low. It's in other words, when it talks about turnover, okay, this is where it's talking about turnover, where you basically want to have low numbers. You can see that this is actually very low. It dates back to pre kind of COVID times, where a couple of times we're at this level. But basically, what they're saying is um, not a lot of people are moving out of multifamily. So that's kind of a good news. Now, why is that possibly? It could be because they're lowering the rental rates. They're adjusting to the market. Like we talk to our clients about, hey, what's reality? And it's great that you might want to raise the rent at lease renewal across the United States. But people are saying, well, listen, if we're at 92% occupancy, maybe we shouldn't be increasing the rental rates. Let's try and hold on to the people that we have. And we're seeing that where they have a very low, historically low turnover rate for the U.S. multifamily. All right, so let's go into the single-family home industry right now. Let's talk about the new move-ins. All right, so you can see kind of like things are not great at the move-ins when it comes to rent growth. In other words, just like the apartment industry, somebody moves out. Nationally, you're going to have a slight difference, about 1% lower rent. So they're not even increasing rents nationally. It's a slightly lower. When you look at the U.S. Single family home occupancy, okay, you can see that good news is it kind of went up a little bit here. It's about just over 95%. But historically, it's still not doing great. So it has improved. That's good. Historically, not doing all so super. I mean, you have to go back to, let me see, 13 years ago, where obviously they had a little bit less occupancy. So it's been 13 years, but at least it started to climb a little bit. So let's see what happens next quarter. When you look at this, then, how does that affect blended growth? Remember, that's new move-in rent, what they charge, and lease renewal rents, what do they charge? You can see once again, very low, 1%. It's hovering around all-time low for the survey, which dates back over 10 years. So you can see where we are. And again, nationally with the single-family homes, you can see that they're basically flatlined about 1% increase, that sort of stuff. And then let's take a look at the U.S. single family home days on market. So what that means is how long have they been marketing the properties for single family home. This is nationally, and you can see we did come down from the all-time high. Okay, so once again, not great information, but we have shaved off about a day or so nationally on the days on market. Okay, and if you look at it, days on market year over year, you can see the number of days on market in March. So this is March data. You're looking at 2026. Well, unfortunately, the worst March ever for properties being on the market, almost 45 days nationally. Okay, and you can see it where it was. Obviously it's been climbing for the last several years, 3 or 4 years. Okay, so that's the kind of like, I guess, news or interesting news anyways. So things haven't really improved that much at the national level. Now, I thought this was kind of interesting. I saw this from Resi Club again. Great resource of information. And you can see here's they're talking about single family permits in 2025. So it was last year, but just wanted to show you some of the things that I've talked to you about before. They're showing you, like, again, where the dark green in the United States, like over here, for instance, or you can see Southwest Florida, a little bit in Orlando, a little bit in the kind of like East Coast, not in Miami, but further up north, and kind of like in Tallahassee, you can see a large amount of single family home permits. So when people say, well, Michael, what makes you think overbuilding? Well, not just what's happening with the with the rental rates. But when you look at the actual permits, you can see that Punta Gorda was at 12 out of 1,000, one of the largest in the nation. Myrtle Beach, I guess, was the biggest one at 15.5. But like again, when you look at Southwest Florida and all the permits for single family homes in 2025, one of the largest in the nation per 1,000 people. Again, that's why we're overbuilding right now. That's the reason for things. But another interesting slide I thought I'd share with you. They're talking about how the U.S. investment right now is low. So they're talking about investor demand, and they're saying, well, how is it on a normal level, like say 50 being the normal level? How is it that people looking at investment, you can see that this is the quarter here by month or the quarter itself, first quarter here, and you can see, oops, not a lot of investing investor demand, and they're plummeting. Now you can see it here. They talk about heightened legislative uncertainty. So why would they think it's the heightened legislative uncertainty? Well, one of the things that they did here was another graph, and they're showing institutional investors in blue and individual investors, and you can see how it kind of like followed a little bit here down this trough in 2025 to very low in 2026. And you can see as well, not quite as bad as 2024, but there's been a precipitous drop in the first quarter of individual investors. Okay. So what they were saying is whether it's a single person trying to buy, investment properties or like the Wall Street kind of REITs and so forth, a lot of the demand came off. And that's why they were saying, well, listen, this isn't just like the investors saying stuff as a corporate thing or individuals. Why did both come off? And that's why they said, well, they're thinking that some of the legislative stuff at the national level, and you're talking about interest rates, a little bit of uncertainty, people are kind of holding off from investing right now. So that could be an opportunity for you. Now, let's get into a little bit of what is actually happening in Southwest Florida. Here it is, our data. So now we're looking at Southwest Florida vacancies. This is the last quarter. So this is the fourth quarter of 2025, first quarter of 2026. Here's the thing. Basically, in all aspects, the numbers of vacancies went down. That in itself is very, very good news. Before you can ever have recovery, you need to have massive amounts of rental properties start subsiding. So that's what started to happen. Okay, but the question is, as we know in the area, January and February, get a lot of people, like actually November, December, January, and February, we have a lot of people coming down from up north, a lot of investment, a lot of people coming from around the world to enjoy our great weather and hopefully hospitality. And you kind of expect things to speed up business-wise here, right? Whether it's you selling your home, renting your home, that sort of thing. And it happened. So here we have, like, again, just for the people that aren't used to this, I took 3 bedrooms, these numbers, because the most demand that you can have as a subsector or class is 3 bedrooms. Nothing wrong with 2 bedrooms, 1 bedrooms, or 4 bedrooms, but the average person, the greatest demand would be for a 3 bedroom, because you can be a single person, a couple, family with kids, whatever the case is. 3 bedrooms are the ones that lead the way. And so in December, you can see here, and again, I'm not going to read off every single number, but when you look at Fort Myers, 731 at the end of December of 2025 to 599, that's down 132 units that are actually available to rent. You look at Cape Coral, 1,172 down to 837. The biggest drop of the survey is in Cape Coral, minus 335 properties for rent. So what does that mean? Well, maybe people could have put them up for sale, right? That's part of the issue too. But either way, if you were trying to rent a property in Cape Coral, you just had 335 properties come off the market for rent in March of 2026 compared to December of 2025. Also leading the way, kind of Lehigh, it's down by 103 units. It went from 858 to 755. Port Charlotte started off December 2025 at 369. It's down to 278. That's down minus 91, or 91 less units. Naples, 1,302 down to 1,159. It's down by 143 rental units, 3 bedrooms. And Bonita Springs, 214 at the end of December. If you try to rent it now, there's only 180. It's down by 34. Now, the subgroups of this, the $2,000 a month less, or $1,700 or a month less categories, they are all down as well. All of them are down. And this reflects, right, you start off with the total number of properties for 3 bedrooms, say in Cape Coral, and as they don't rent, you're going to start lowering that rent. It's then going to hit to $2,000 a month or less. And then if that doesn't rent, you're going to continue to keep sliding until it eventually rents. It's normal. That's what most people are going to do. Some people can hold on and say, no, I'm not going to rent my unit. I don't need the money. For whatever reason, I'm not going to lower the rent. I think it's worth this, and I don't care if it's vacant for 6 months. Some people are going to be like that, but most people will say, no, I'm going to adjust to the market, and I'm going to rent out my property. And you can see where even the number of properties that are below $1,700 a month to rent in Fort Myers went from 64 down to 57 last quarter, down -7. Here's, again, really fascinating data. Cape Coral had 188 3-bedroom homes that you can rent for $1,700 or less, down to 102, and almost halved, okay, down by 86. And Lehigh, not to be undone, did very well as well. They had 158 properties, 3 bedrooms, 1,700 or less to rent at the end of the year, and now they're down to 118 at the end of March, down by 40. So that was still a pretty good drop of about 25%. Okay, so enough of these numbers. Let's talk about year over year. Okay, so let's not talk quarter to quarter, okay? Because as we know, in Southwest Florida, things tend to be very good in January and February. Let's talk about now year over year vacancies. So here, March of this graph kind of looks at March of 2025 to March of 2026. You can see, though, year over year, in Fort Myers, 3 bedrooms, they actually increased by 58. From 541 3-bedroom homes to 599. Cape Coral, 1,182, down to 837. Okay, so Fort Myers had a couple of extra 3 bedrooms compared to last year's March. Cape Coral actually went down by 345. Lehigh Acres, total units 670. It increased slightly to 755. Port Charlotte, 251 in March of 2025, up a little bit to 278 in March of 2026. And Naples, 1,431 properties available for rent in March of 2025, and it's down by 272 to 1,159 in March of 2026. All right, so what does that kind of mean? Well, what I took from this is exactly what you see in this comment category. If you're looking at 3 bedrooms in the Fort Myers area, it looks like not a lot year over year will put on the market for 3 bedrooms. I'm not really talking as much about the rental rates. but I'll get to that in a second. So what I mean by that is that the market is starting to stabilize. That we're not getting a huge amount of new properties coming onto Fort Myers because, quite frankly, right now we really don't need them. Okay, because we have oversupply. What's interesting is that you see in Cape Coral this minus 345. That's where I say that the market is adjusting and sliding. So we still are having properties that are a lot of properties still in Cape Coral. But what we're starting to see is the properties, you can see the numbers of $2,000 or less from March 2025 to March 2026, they actually increased 58 units. And $1,700 or less, it went from 34 properties to 102 units. That basically exploded. It doubled the number. So what it means in Cape Coral is you're seeing less properties on the market, and those that are there, again, some of them might be going up for sale. You take them off the rental market. You're hoping to sell when it's a good time of year to sell, normally in our area. But what we're seeing is those lower ends, those properties dropping into 2,000 range or 1,700. People are starting to say, okay, it's a hard rental market, we know, and we're starting to adjust it, and you can see it. So the total number of properties in Cape Coral down, but also the cheaper available three-bedroom homes, no matter what level, 2,000 or less or $1,700 or less, they have increased. So that's why I say that the market's adjusting. Some people are putting their properties back up for sale and not renting them, but at the same time, the market in Cape Coral is still sliding. It's evidenced by what we're seeing. What are people asking for the rent? Lehigh, as well as sliding. We had a little bit more properties year over year in terms of number. But again, look at the number of 2,000 or less in Lehigh. So if you're a person looking for a three-bedroom home in Lehigh, you had 400 properties, $2,000 or less. That's an increase of almost double from the previous year. And then again, $1,700 or less in Lehigh, you went from 27 in March of 2025 to 118. Okay, that's an increase of 91. So what that's saying is Lehigh, what we're seeing is you're seeing a slide. You're seeing a couple extra properties year over year, but you're seeing drastic price reductions in Lehigh. Now, what's Port Charlotte doing? Very quickly, Port Charlotte, a little bit of an increase, 27 units year over year. You're seeing 2,000 or less properties. That also increased. That doubled. It went from 68 in March of 2025 to 143 in 2026. So that doubled. And then you had only 9 properties available for rent, $1,700 or less in Port Charlotte in March of 2025. Now we're up to 61. That's an increase of fivefold. So once again, you're seeing in Port Charlotte, my analysis, it's sliding. You have a couple extra properties coming on year over year, but you're starting to see a lot of properties start sliding into those categories. And then Naples, you actually had less year over year properties available, three-bedroom single-family homes from 1431 to 1159. So there's a decrease of 272 properties. So there's 272 less three-bedroom homes. And you can see obviously that, again, I would say that Naples right now is adjusting. People are putting up for sale and that sort of stuff. Hopefully they sell in those people's eyes and they go from there. So just taking a look at that, again, feel free to reach out to me about that. But fascinating. So it's we'll talk about it a little bit at the end. But here we are, Red Forces applications. We've been strong and steady. So year over year, you can see we had the exact same number in March. We had more in February, a little bit less in January, but we have been stable for the first quarter. Okay. So again, I put a caveat because, numbers are things that can be manipulated. Like they say, lies to have license statistics. So you can manipulate things to look things that, good or bad. I'm not here to do that. I'm just giving you the data and commenting on it. So we've been steady. But again, what can affect the number of applications, number of properties on the market? So if we have 20 one year and 40 the next, pound for pound, you would almost think that we would double it. And then also the type of property will affect how many applications. If you have a $5,000 a month rental versus a $1,000 a month rental, you typically tend to get more at the $1,000 rental rate because more people on average can afford it. So good news is that we've had, again, a very solid applications so far for the first quarter. So a couple of final thoughts. First of all, are the numbers better because of our Southwest Florida season. That's what we're going to see. So second quarter, what I'm interested in, so a guy that looks at numbers is, hey, are we still seeing sliding rental rates? But not just that, what's happening to the actual overall numbers of three-bedroom homes in each of these areas? Are they going down? Okay, so not just year over year, but are we to see more properties getting rented, maybe more properties being sold off? What's happening? Okay, so is it the season that caused these numbers to fall, or is it, basically good times and that things are starting to get better here in some areas of Southwest Florida? The thing that we're going to do for our client Zoom session on May 18th is we're going to talk about these numbers. So on May 18th, I'm going to look into the newest numbers that are available in April. Okay, sorry to get excited, but I'm kind of, as a property manager and seeing our clients kind of like see how hard it is to rent properties in this area. I want to see in April what these numbers reflect. And then we're also going to talk about absorption. So what does that mean? So when we talk about all these numbers, oh, we have 1,000 properties available in Cape Coral or whatever the case is. If it's there, what's the absorption rate? Are we overbuilding still? Are we cutting back on the building? What does it look like for people moving into the area? Michael, when is this crazy stuff going to stop? When are we going to start seeing an increase in rents? That sort of stuff. I mean, if you're a renter, obviously you don't like to see that. You like to see the rent as low as possible. If you're an owner, you like to see the rents increase because, quite frankly, your property taxes are generally speaking not going down, and your insurance is typically not going down either. So you see at both ends of the spectrum. Even if you're a renter seeing this, I'm just giving you the data, letting you know what's going on. You can do with it whatever you like. Okay. So we're going to talk about that. It's going to be an interesting session. I look forward to doing more data diving in the upcoming Zoom session for our clients. Even if you're not a client of Red Fortress, you can still, if you're on one of our mailing lists, you'll still get the invite. Always like helping people out as best we can. If you have other questions in that, about things, I've done a lot of blogs. Again, you can go to our website, Red Fortress Property Management.com or redfortresspm.com. Go to our blog section. You will see previous analysis, a little bit longer for last quarter. You also see some stuff about what the Federal Reserve Bank thinks about interest rates for 2026. I commented on that on a whole bunch of other things. And again, like always, please, if you have questions, comments, if you thought something I said was crazy and outrageous, or you wanted something else answered, please email me, mike@redfortresspm.com, and I will be happy to do a quick video, maybe much shorter than this, obviously, on a specific topic, and we'll go from there. So again, reach out to us, mike@redfortresspm.com. Hope to see you May 18th. I'll send out the invite shortly, and have a great day.